Good weekend, all. Ira Epstein with your Spider ETF wrap-up, and this is your weekend edition for Friday, the 25th of February, 2022. I wanted to get these out early because you don't know what the weekend's going to hold. Figured I'd get it done now. The Ukrainian situation isn't going to go away. It's going to get, if anything, worse, in my opinion. We need to get the two sides to sit down and talk. The problem is when they sit down and talk, I think that President Putin's going to demand that the government be reformed so he can put in his puppet regime. Otherwise, he'll do death and destruction. And as valiant as the Ukrainian fighters are, and apparently according to U.S. press, I don't know if it's propaganda or not, the people are doing much better. But I don't have any faith that you go to a police station, they give you a gun, and now you're a militiaman and you have no experience with it. You probably kill yourself. So you got to be very careful with all this as to what you read. I'm sure the Army's doing the best that it can. The problem is there's not enough of them. They have no air defense systems. The U.S. is to blame. We didn't get them there quick enough. And they're at the mercy of Navy on one side, a massive Army that they're still coming in waves. They're nowhere near through. They pincered the city, and now you're seeing destruction within the city. This is not what we wanted to see. We didn't want to see people living in subways, if you're watching. We didn't want to see where those that want to leave the country can't. If you're a man between 18 and 60, you're not getting out. You're expected to get a rifle and fight for your country. You don't have much of a chance against these trained paratroopers if you're a guy from the city. I'm not saying that the Ukrainian army isn't talented. That is not what I'm saying at all. But generally, homemade militia doesn't, history's not the best thing. They're fierce, but you know what happens. So we'll see. Nobody's mentioned yet for Putin war crimes. I'm a little surprised. You invade a country, you're killing people. Isn't that a war crime? You can write me about it. I think it is. And don't keep writing me that I compared him to Hitler and so on and so forth. I'm not the only one that has done that. You do realize that the president of Ukraine is Jewish, actually. So to call them neo-Nazis is stretching it beyond any imagination you can imagine. But I give the guy credit. He's there, his family's there, and they're after him. And if they get him, it's not going to be a very pretty sight. Okay, so you'll hear the good, you'll hear the bad, but at the end of the day, you've got too many soldiers, too many well-equipped with all the armament they need, with the technology. That's hard to beat, and the Ukrainians are not getting any more help. I mean, that's it. We can send them what they want, but it's a little late for a lot of these things where you're going to put them. Okay. Then we have to bring on board that we're going to start getting jobs data this week. We're going to got a Fed talk coming up. We have a lot more OPEC coming. I hate our policy in energy. I don't mind saying it. I hate that President Biden gets on a phone and calls up the Saudis to give him more oil. We have all we need right here. Open the spigot. Why do you think it's more green that they do it and we don't do it? I'm lost with your strategy. The second thing I don't get, you're going back with Iran on a deal. It's as sure as we're sitting here talking. And at the end of it, that deal runs out in 2025. They're going to take the money. They're going to support terrorism. They'll give you the oil. They'll hate you as much as they always have. What is this about? This is America's energy policy, everybody. Think about it. He'll say he's bringing down the price of energy. Sure he is. At what cost? All right. We said we were working on mining. Now, over the weekend, I'd like you to write me what other market would you like me to move to. It can be an individual stock. It can be spiders. Let me know which one. I'll take a look at them. They have to have good volume. And I'd like to switch out. I wouldn't mind switching out on a Monday or a Tuesday. Tuesday always, but maybe Mondays. That can make it a lot of fun. But I'll try to wrap them up on a Sunday night here. And as you can see, we are nicely higher. This is one of my favorites. I have been telling you, if you've been watching me, that XME and copper I really like a lot. I've said it on all kinds of TV shows that I'm on a regular basis. Higher lows, higher highs. The market has held the 18-week average of closes. This is the green, is the 200, Right here is the gray, the green is the 100, I said that wrong, and then the 18-week. So where's the resistance? It's the upper Bollinger Band. Now the market's over it. You only stay over an upper Bollinger Band 5% of the time. So this week you closed up 48.40. The Bollinger Band was 48.23. That's the first week you're over it, the second, and this is the third. Okay, I've seen it go 5, but that's where it generally fails. So be aware that you're in some rarefied air. Don't be surprised if you get a pullback in the market. Support's all the way back at 44.95. The market has got momentum up, the bias up, but you're getting ahead of yourself by staying over the upper Bollinger Band. In KBE, this might have been it on this break. It hasn't negated the downtrend. To negate the downtrend, the market has to get back over right here. This, excuse me, I went too fast. 58.75. Now the break we had this week at 52.37 was under this low of 53.20. So you cannot get an uptrend to work. The most you can have is a lower low and a higher high. As we approach the 18-week average, I think the pros on a weekly basis might have gone short again today, with stops right up there at 58.76. Wouldn't surprise me if they did that. Then we get to the industrial sector. Well, you fell down last week. That's where I think the pros covered shorts. First challenge of the Bollinger Band after a bounce again. Momentum's trying to turn up. I'm not keen about wanting to sell this just yet. The spot to come in is the resistance, one of them at the 18-week average, but to get there, you have to take out the 103.05. A chart pattern would be in lower and low, higher high. I don't think I'd want you to do that. You have an embedded level in the XLE. Why? It's when the slow stochastic takes both the red and the blue number. They're called a K and a D. And they're going sideways over 80 for several weeks or more, and that's what you have. It means these breaks, including this week, were the spot. Now, there's a moving average that I teach in my daily subscriber videos and so on. I don't show it here. This is the freebie. You don't get everything. And they were buying this week. Target, 71.73. Bail if the red line closes under 79 next Friday. SPY was another short cover last week. First challenge again. So this was the down move, but that was a vertical price break going from literally an upper Bollinger Band to lower. This was the measuring break, rally. You go back to what I call the line in the sand, the 18-week average. Chartists like to have neutral spots on a chart. So whether they use mine, the 18-week, the 20, the 21, I've seen all the variations. It'll be in there. But the purpose is when you're up hard, you generally pull back there to see what's going to go on. If you break hard, you might pull back to see what the market's made of up there. And then if you go down, you're looking again for targets. Well, one of these set of targets is the Bollinger Band. Is the market still bearish? Yes. Will the pros, in my opinion, sell it on a rally? Yes. Where will the stop be? I think over 458.12, and they'll be looking to come down there again. In the emerging markets, as much as people like them, I don't. And I've been very candid on it. On weekly charts, all you've done is have rallies back up into that 18-week, and you haven't been able to stay over it. Until it does, I think this market's in trouble, period. Now, it did get to the 200-week. It hasn't done that. Each of these breaks carries lower and lower. So until it's not good, the pros will probably sell again at that 18-week. They'll put stops over the last high. That one in this particular case is 50.11, and they'll play it until it doesn't work anymore. That makes all the sense in the world to me. In the gold, I teach you never buy over an upper Bollinger Band. Generally speaking, the market will pull back and give you a better entry spot. And I know you were very unhappy with me if I said that, as gold spiked up. Now, it did get to 182.60, and it collapsed and closed right under the Bollinger Band again. Now, momentum is turning on you to the downside. This market's got to prove it can hold. Where's the logical spot for it to hold? 170.18 to 170.15. The combination of the 18-week and the 100-week average. And if the market gets back underneath, and I'll give you the number, 167.03, I think the pros will throw in the towel and just say they're disgusted with it again. But I do think they'll buy the deep break in the market. Not the gold miners. The pattern is a lower low, higher high. I couldn't have been more vocal in the morning subscriber video in telling my traders, because the pattern had been up in the gold, the GDX, and I said, you got to come out before this break happened. I felt very good about that. ARK, still embedded. Each of these rallies continues to get sold. You know, I was reading a story today about this particular investment, and people are complaining. A lot of money's left them. And the reason is they say it seems that they buy high and sell low. And she did phenomenal in the roaring bull markets. Absolutely phenomenal. But now the game has changed, and people have to decide, do they like the path she's on for that change? That's all. Amazon, still in a downtrend, but culminated this week finally by getting back to a lower Bollinger Band. Do you see that? And held it. That does not mean it's bullish. Don't get me wrong. But any rally from here will give you higher lows, lower highs. The game could be changing. In Apple, the one thing I know you heard me say here, I said it early in the week and so on, I mentioned 3 stocks, not that you should buy them. I gave you some staples because I think people should own the staples right now. And I'm not talking the office store. I am talking like Coca-Cola and Pepsi, just those examples. But I did mention a tech stock, and it was intentional. And I said, I think Apple's going to be one of these that holds. And Apple came back while it was down 245. It got right down by key numbers, by key averages at the 152 level. Tesla's been on a tear to the downside. Nobody talks about it. But this is a stock that was just up here at the 1,200 plus level. It just went down to 700. I don't see anybody on TV saying, you know, that stock's almost had a 50% decline. I don't see anyone talking about it. Tesla's got problems. Everybody's coming after them. And let me give you the word, everybody. I keep getting, today I got more notices from Cadillac, reserve the Lyric. That's their new electric car. And I had a friend call me the other day, and we're looking at the new Genesis, the SUV that they have, which looks to me just like a Bentley. It's unbelievable. Bentley is going to go electric. So all these things, it's nice, and it's a great company, great car, but they're going to have competition they didn't have before. I think the market has to reprice that stock. TLT, coming down. Okay, do you want to be long this as the Fed's embarking on interest rate hikes? I don't think so. So the question is where to get short, in my opinion, not long. And looks to me like the 200 week on a rally is going to be a problem for that market. I'm sorry, that's my news that I watch. I love the news, by the way. My charting service, if you'll notice, I get all the highlights about everything. This is a mixture of QT. I get Dow Jones news in this. I can get Reuters, whatever I feel like I want to get with it. So I have screens, and I watch everything during the day, and got the TV stations going, and I pick what I want. And, you know, one of you criticized me about the war that I was watching on CNN. It's not about the content of CNN. They do war coverage that's phenomenal. I don't watch them for anything else. Really, I don't watch them for a darn thing else. But I've always loved their war coverage. I think they do a great job of it, so I watch it. And I'm going to give another one, Fox. Fox had great war coverage. I think they're making a real run at that. Okay. So in the spider, I'm going to rotate these all the time. But this gives you an idea of what I'm trying to cover. And I ask you, my subscribers, tell me what you want me to cover. And my paid subscribers, they'll tell me, and we rotate. And we'll go to the hottest things. What are they doing? What should we look at? It's a lot of fun. 41 charts. It starts this way. At about 9 in the morning in the spiders, I sit down. I've got all the news that has already come out, giving you what the market was looking for, where it's at. And if you get what's called my combo, you've already got my futures information at 5:30 in the morning. You got the day's events, what the market's been looking for, what's happened in the world. We then move on. Why do I do this at 9? I want the first half an hour of trade to go by me. In my experience, I've learned the noise in the market comes in at that time. You've got the hedge funds, the professional money in other ways coming in, family office money. There's all kinds of things that go into that. And you're getting reports between 8:30 and 9 often that can move the market. I want that out of the way. I don't want to deal with the algorithms in there that jump the market and then it settles back in, but you can get stopped out in the process. So at 9, I start recording. And by 9:40, 10 o'clock, you've got that tape. It takes me about 20 minutes to record. It takes about 15 minutes to render. I'm looking for better rendering service. I can't find it, and I've gone everywhere. I've hired outside experts. If you have a minute of video, it seems to take a minute to render to get it so that everything's done so it'll play without blurs on the websites and wherever I'm putting it. You don't see these on YouTube, that I can tell you. So you get that, and then I'm going to tell you, hey, I think you buy here, you sell there, this is what you do. This is not expensive. 24 videos a month, typically 5 during the week, Monday through Friday. If there's a holiday, I may not do one. Saturday or Friday or Sunday, I will do a weekly one at 6 a week, and it goes by the time. It's not a monthly subscription. It goes by how many days in a month. That's how it works. You can join it at any point. Go there and give it a try. See if you like it. All you need to do is go to the website, under the word research, it's all there for you. I'm Ira Epstein. You have a great day. I will talk to you all Monday. Take care.